Good day, guys. My name is Olayera Ahmed Olalikon. I'm the chief mentor strategist, forex strategist, forexahmed.com. We're powered by Juggernaut Brains Nigeria. Our major objective is to support our traders while they in the journey to support them in the journey of learning how to trade the forex market. Yeah. So forexahmed.com is a platform where it's a forex mentorship platform that helps people to learn and also earn at the same time, because we offer trading signals as well, free trading signals for all our learners. So basically, this is an introductory training. That will actually provides that base for anyone who is intending to progress in forex trading. Yeah, the training will actually give you provide you the base required in the journey of learning forex, and also if you are experienced already, it also helps you to gain more insight into the reality of things in the market. Plus it also helps you to learn more, so that you can help yourself, going forward, right? Yeah. So now, introduction to forex trading. Introduction to forex trading 1.0. We have understanding the forex market. So we have the foreign exchange market is a part of global financial market that deals in currencies. Trades are done over the counter. So from this statement, you can see that the forex market is just a segment of the financial market. So the major segments of the financial market are, the fixed income market, equities market, commodities market, metals market. Yes, so these are the composition of the real financial markets, currency market, equities market, fixed income, metals, and commodities, right? Yeah, so, and then the most important thing you need to know here is that the forex market remains the core of every other financial segment, of the financial market. Because in order for you to transact, you must transact with a medium of exchange, which is currencies, and this explains why the forex market is the biggest of all, it's the largest of all, and the fact that it's the largest of all also gives you some advantages. You're going to learn about that going forward in the training. So, but I just wanted to note that the forex market is at the core of every transaction in other markets. So, meaning that there's nothing happening in other markets that will not have an impact on the forex market. Yes. So, because of its direct connection to human consumption, it is the largest market on earth. According to the Bank of International Settlement, it does around $6 trillion worth of trading transaction daily. Yeah, that's understandable, because of the size. It's huge, So the Bank of International Settlement is just giving us some numbers to back our reasoning up. So yeah, it's a very, very huge market, a big market, really. So market participants mainly buy and sell currency pairs. Also, with the help of technology, access to the market is second to none amongst other financial markets. So, you know, I'm sure some of you will be like, what do I mean by market participant mainly buy and sell currency pairs? Because we trade currencies in pairs. For example, just go to a typical Aboki man, and then you have Naira, a typical Malam, or a typical Bureau de change. Let me just put it that. Let me not say Malam now. Let me say Bureau de change, you have the dollars, you want to exchange with Naira. So technically what you are about to do is that you want to sell the Naira while you buy, sorry, you want to sell the dollars while you buy the Naira, because you have dollars with you and you want to exchange it with the Naira. So meaning that you want to sell the dollar and then buy the Naira in that one transaction. So you can see that, and also even the Bureau de change on the other end, they are actually buying the dollar from you while they are selling the Naira to you at the same time. So you can see that each of the counterparties in that transaction actually doing simultaneous buying of one currency while you sell another currency. So this is why we say currencies are traders in pairs. This is why we say market participants mainly buy and sell currency pairs. You're going to understand what the currency pair means going forward in the training. Yes, then of course, I also talked about the accessibility. Market also provides participants very easy accessibility. In fact, the easiest access to markets amongst every other segment of the financial market. So if you think about it very well, you see that you have a lot more easier access to the forex market than any other financial market, really. So yes, so going forward, I would like to also talk about some major attributes of the market. I think this is important because for you to be successful in any market, come think about any open market close to your house. For you to be successful in that market, you need to understand some unique features of the market, like the time they operate in the market, the objectives of the participants in the market, how they want to earn their money and all. This will help you to be able to strategize. This will help you while making your decisions at all times. I think everyone watching the video right now can agree with me. Yes. So first, I'll start with the nature of a typical trading day, and in relation to the flows of transaction that comes in. So a typical trading day basically can be divided into three parts. You have the Asian session, we have the European session, and also the North American session, right? So a typical market day starts with the Asian session, and of course, even in the Asian session, we know that all Asian countries, the business hours of all Asian countries doesn't start at the same time, and of course, does not end at the same time, So you see that some would have started while probably maybe 1 hour later, some other ones will join, and then join up in trading because of the differences in their timing. So the business, the business period in Japan does not exactly start when the Chinese starts as well. I think in the Asian session, The New Zealand and Australian session actually starts first, and then you see Japan, China, and other parts of Asia joining up later, maybe 2 hours later or even 1 hour later, right? So, and that's how it goes. So you want to explain that in a typical Asian session that starts in a day, flows will actually be slow initially from the beginning, and then of course maybe by right before the middle of that session, you find that the flows would have increased because all the countries are now active, right? And of course, towards the tail end of the Asian session, we should expect that the flows of transaction will actually wane as it ends because of the fact that different countries, the business hours in different countries has already ended, it's ending. So as the business hours ends in different countries, the transaction wanes, up until when it's going to end, the Asian session is going to end finally, right? So like 1 hour before it ends finally, the European session kickstarts, right? And you can see kickstarts, and then when it kickstarts, of course, you expect the European session to initially be slow as well. And of course, the transaction is expected to increase as you move forward into the European session because other countries also have joined up, right? And of course, just immediately after the mid part of the session, you also have the North American session opened. North American session is comprised of the US markets and Canadian and Mexican markets as well, right? But the European session is comprised of the European countries and of course even African countries because business hours in Africa kind of coincides with business hours as well. So you see flows coming in and out of Africa as well during the European session. But the European session is kind of unique because of the fact that it attracts a lot of flows because of its financial services base. So London is is a hub of financial services. So you see a lot of flows coming in during the London session. Of course, the London session is in the European session as well. So the flows come in as well and all. So, and of course, for up to like 4 hours in the European session, we see that the European session coincides with the American session as well. So we want to expect that the flows during this period also should go up. But of course, as the European session moves to its end, you should expect flows to also kind of wane, at least in the last 2 hours thereabouts. You should expect flows to always wane during that period. So and of course it wanes into the second half of the American session as well. Then till the American session ends. Ends finally. You understand? So that's like the cycle of a typical trading day. But why is this very, very important? This is important because of the fact that while transaction wins, it actually allows for it affects prices in the sense that price will slow. So, for example, if the Asian session are taking a particular direction, right? So why it wins, why transaction wins, it's expected that the direction, whatever direction that it has taken, would slow, it will reverse a little bit. Will create an opportunity for either a reversal or also a continuation. So it's either that direction continues going into the European session or it reverses. So because of course it's going to be slow. So since it's going to be slowing, so that's like one period that traders need to always look out for. While a session wins, traders also need to study the reaction of market participants, the reaction, the impact on prices. That can help an analyst or a trader to be able to um, understand some insights and understand the direction to go, right? The same thing happens when the European session move towards its end, you know, prices slows, direct momentum slows, you know. So it always provides an opportunity to either continue to move in a whole direction or reverses a little bit or reverse completely, So that's what we should watch out for in a typical trading day, right? So that's that. I think this is important for traders, right? So that's that for that. Then I would also like to talk about the participants of the market. The participants of this market include commercial banks, central banks, development banks, hedge funds, brokers, investors, retail traders, importers, and exporters of goods and services. Right. So majorly, there are two that are very, very important in this set, right? Because of their impact on the market. Yeah, the market makers. Market making operations is usually owned by commercial banks. So market making basically is just a market infrastructure that allows buyers and sellers to meet easily, at all times. So it brings some efficiency into the market. So it makes the market a little bit efficient, So they are there just because they want to earn commissions by filling up people's trades, by filling orders for people, So and everyone goes there to look for to fill their trades, to execute their trades, So the market maker, basically, their activity is kind of very, very focused on, it is important that market maker learn about them because of the fact that the market maker, because of the way they do their business, they have to fill people's trade, right? So it means that they may have to fill some unfavorable trades as well, even though traders may have to pay for the commission and the spread, but they will have to feel it because that's what they pride themselves for. That's what they are out there to do, But they don't just do it and go to sleep. They do it and at the same time still find a way of closing their unfavorable trades. So while they try to close their unfavorable trades, it has some short-term impacts on the market, on prices, and that's why a lot of people always talk about manipulations, the market, and all. So I don't see it as manipulation, but you can call it manipulation, but I think everyone is just trying to profit. Everyone is just trying to avoid losses. So that's what they also try to do, So while they feel your trade sometimes, even though it may mean unfavorable to them, they have their strategies and their tactics to always cover up the unfavorable trades. And while they do this, it definitely reflects on the movement of price. And that's why sometimes when you expect price to go up, it should not go up. Why? Because of the activity of the market makers. They want to block off some of their trades, and then later the market settles and then now goes whatever direction that you have anticipated. So this is more reason why traders are always have to be very, very patient, picking your trades. So the market makers have a short-term impact on the market. Their objective is just to earn commission. So you can call them traders too, right? So yes. So the central bank, on the other hand, basically impact the markets in medium to long term. Yeah, because of the fact that they have the power um, to change interest rates. So because they have the power to change interest rates will always determine the value of a currency, medium term to long term, right? So whenever they do this, they always have a ripple effect in the forex market as well. So they impact the market medium to long term. For example, between 2021 and mid last year, or even the whole of last year, um, we saw a particular impact on the market, where currency had to take a particular direction due to the stimulus policy embraced by a lot of central banks in the world. So that's an example of what we are trying to say. So market participants should keep the eye on the activity of market makers and also the brokers as well. So also, we also have investors, that's people that want to invest in foreign countries. Of course, they need to buy stuffs or sell stuffs in the forex market as well for them to be able to do whatever transaction in the country they're going. Of course, retail traders, basically they are speculators in the market. They just want to gain from price movements. So retail traders, you see them trading all the time, trying to make some profits. Then you also have importers and exporters of goods and services. They want to buy goods, they want to do business, So they are also in the market, So, and of course, hedge funds as well. Hedge funds basically are speculators as well. They are big boy speculators, they speculate big. So they execute their trades in the market maker network. So brokers are also more like market makers, but brokers basically service the retail traders, retail speculators. So they take, because brokers basically most brokers do not have that financial clout to do market making activity. So they always take retail traders order to the market makers network for execution. So that's basically about the objectives of the participants of the market. It is important because it is important to learn this, because it can help you, in your analysis of markets, right? So that's that about the properties of the forex market. Yes. So I hope you're following me, guys. Yeah, thank you very much. So we have 2.0. That's the chapter 2.0. So on using the mobile MT4 application on Android version, the traders gateway. So for seamless accessibility, traders must place trades through a trading application on their Android phones, Apple phones, or computers. This application is called the MetaTrader 4, or in some cases MetaTrader 5, right? So that's an application you can have on your phone to be able to access the forex market through your broker, right? So meaning that everyone needs a broker, everyone needs a reliable broker, So traders must learn and understand that it's not every broker that are meant to be trusted due to their activities, due to some factors, So we all have to rely on we all have to rely on some knowledgeable people to be able to guide us as regards to what broker to use, based on different factors objectively, right? But basically, all in all, you need that application to be able to assess the market. So the functions of the MT4 Android, basically, the MT4, the function of the MT4 Android includes: one, it presents the price quote of a broker in real time. So meaning that the quote, because of the fact that every broker brokers work with different market making network. So quotes are bound to be different, although it may not be significant for retail traders, but it can be significant for people doing huge transactions. So, but of course, it is important, so present the price quote of a broker in real time, changes by the second. And it also ensures the statistical presentation, sorry for this mistake, statistical presentation of price movement. That is, you can be able to see the history of price movement, and of course, even the current movement in price, right? So traders need that to be able to analyze and predict the direction of things for whatever currency pair they're watching. And of course, lastly, it also supports the placement of your trade, right? So on your Android phone, this is how the application looks, right? So this is the code part. Like when you click the bottom left of your Android phone, like this icon, of course, you have the code board, where you have different currency pairs with their respective prices, available. So if you think you need any currency pair that is not here, you can click on this plus button here. Then of course you can enter whatever currency pair you wish to trade. The moment you click on it, when it comes up and then you click on it, automatically it stays on this page. And of course, from this page, you can right click, or you can click on any of them. You have the option of the charts. So it takes you straight to the chart of that particular currency pair. For example, if I want the chart of Euro USD, I can just click on this part, and then it gives me an option of the price chart. Then I click, then automatically I'll see the chart of that pair, right? So also here is the price chart, statistical presentation of price chart I talked about, like I said. So when you click any of the pair there, you automatically have this. You understand? You automatically have this. And also by clicking here as well, you can have the chart, statistical presentation. By clicking on this icon, you can have statistical presentation of things as well, right? Yeah. Then thirdly, I said it allows you to place your trade. Like I said here, it allows you to place your trade, supports the placement of your trade. So to place your trade, you can click the top right. It takes you directly to the page where you can place the trade. It takes you directly here. You understand? Then of course, if you want the details of your account as at that time, by clicking this icon, it gives you the page, where you can see your balance, your equity, your free margin. But you're going to discuss those terms, going forward. So that's it. So on the page of placing your trade, you may have to enter some details like stop loss, take profit, and of course, volume, and even the type of execution you want, So we'll talk about that type of order that you want, So as we move on in the training, you learn about all that. So the moment you enter all the details, you set all the details, and all you need to do is just to click sell or buy here, right? So that is that, right? So basically, that is all we have for this part of the training, right? You can join us going forward in the next part of the training, where I'm going to be discussing some major details as well. Don't miss it, guys. I'll see you in the next recording. Now, you can also, don't forget, you can also always go to our website, www.forexamed.com, to check on some learning content. And of course, you can also contact us if you wish from through the website. You have our representatives waiting for you, to provide solutions to all your problems. Thank you very much, guys. I'll see you in the next recording.